All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Monday, March 24th. Thank you, everybody, for being here. In the morning, we had some bright green, some green that I don't think a lot of us have seen over the past couple of weeks. And that green actually sustained itself to a decent extent by the end of the market open. And as we get into the end of the day on the market close, we've pretty much kept up that green. In fact, we have extended that green further. We got 15 minutes left. Hopefully we can hold it. But the S&P 500 is up 1.82%. It has recaptured the 200-day moving average, which was at about $573.80. We are now at 574. Maybe we get a 2% day in the next 15 minutes. We'll see, but I would be very happy with a 1.83% day. And Tesla is up 11% on the day. It has gained $89 billion in market cap and quite frankly has not slowed down the entire day. Nvidia up 3.54%. The Qs back at 490. Amazon back above 200, up 3.5%. AMD's up 7.5% in a day. Massively outperforming Nvidia. I have not seen this happen in a while. Microsoft's up 0.31%. The quantum names are up 3%. Palantir is trying to close in on 97, 96.95. Right now, we got 13 minutes left. Let's see if we can get above 97. We just touched 97 right there. Hopefully, we can close above it. And then Robinhood, 48.22. I think at a high, Robinhood was at like almost $49, $48.90. Right now at 48.22, up 8.7% on the day. It's been an incredible day. Been an absolutely incredible day. Maybe Tim Waltz did call the bottom. Maybe it's because the VIX is coming down now below 18 right now, but it has been an incredible day in the broader equity markets. However, there's some nuance we got to talk about to really understand what's going on in equities. As you can see right here, the VIX down 8.45% on the day. Obviously, this is very good for equities. You guys are saying Trump is live right now. Well, Trump is talking with Trump already went live. Like, dude, Trump goes live more than me. Trump is participating in the Greek Independence Day celebration. I don't think we need to literally watch that right now. Also, Trump was live with the governor of Louisiana. And then 2 hours before that, Trump was live with his cabinet giving out a bunch of answers to reporters on that second cabinet meeting that they've done in 2025. So he's going live more than me. He's becoming like the biggest streamer on the planet. However, Trump said a lot of things, so that's what we got to talk about. So let's get into what's going on in the context of tariffs. Thank you, everybody, for being here. We've got to talk about how we're getting this green and what, in my opinion, Trump has done to kind of try to stop the green today, but he's been fairly unsuccessful with. So first, let's start at the beginning. Why did all of this green start? Well, in the morning, the White House came out, or not the White House, the Wall Street Journal came out, and they reported that the White House is scaling back their broad-based tariff plan for April 2nd, particularly abandoning widespread tariffs on industries like autos, chips, and pharmaceuticals. That was reported late last night, carried into the morning. Market liked it. Obviously, the market was like, okay, wait a second. If Trump's not going to be this aggressive on tariffs, then we can kind of scale back some of the wall of worry that we had around growth, because tariffs are not going to stop any of that growth, and maybe tariffs are not going to be as inflationary, which is going to be a good thing. So that was last night's news. That's what got the market to be green this morning. Then, this was on the market open, Trump announced a 25% tariff on countries buying oil or gas from Venezuela. And his argument was based on illegal immigration, gangs from Venezuela, etc. So the logic that he made was that, hey, if you do any business with Venezuela, aka you buy their oil, we are going to have a flat 25% tariff against everything that you sell. This made no sense to me as soon as I saw it. It made no sense to the markets. I think a lot of people called BS on this. And literally, here's the screenshot right after he said this, maybe like 10 minutes after he put out that tweet. S&P 500 was at 5,760. Now we're even higher than where we were back then. But still, like the markets just hit a new high of day at the time because they didn't care. Like, they legit did not care. And you would think, even a week ago, you mentioned a brand new form of tariffs on some random new country, the markets would immediately dump on that. Now it's starting to be like the markets really just fundamentally are not trusting what Trump is saying, because they think it's kind of like a boy who cried tariffs, and these are not going to go into effect. However, after Trump said that Venezuela stuff, then we have this news by Bostic. Now, Bostic is not a voter. He's not a Fed president who's voting on the actual rate cut decisions. However, he had to open his big mouth and say some things that were rather bearish, but the market still did not tank on what Bostic said. He said the Fed has to acknowledge that historically tariffs have meant a one-time jump in prices. That may be questionable this time. Now, why does this matter? Well, Jerome Powell last week said inflation from tariffs will be transitory. And that triggered all of us because that word is not a fun word. Bostic came out today and said it might not be transitory. Essentially, Bostic came out and said, hey, we might have to think about the long-term effects on tariffs instead of the quote-unquote one-time price bump that they have, aka inflation will still persist, aka rates will have to stay higher for longer. And as soon as he said that, that 10-year jumped up aggressive, 4.329% right now. The 10-year, I think, is even a little bit above that. Yeah, we're at a high of day, 4.335 on the 10-year, which is not what the Fed wants, or not the Fed. It's not what the White House wants. The Fed definitely wants it to go down as well, but the Fed is actually in charge of getting this thing to come down more often than not. But the White House does not want to see this go up. So then finally, about, what would this be, 35 minutes ago, Trump, it took more questions from reporters, I think, with the governor of Louisiana. And he said the following, I may give a lot of countries breaks on tariffs. Verbatim is what he said. So it's like, well, okay. So if you're giving a lot of breaks on tariffs, the markets kind of interpret that as bullish because we're getting more tariffs. This was after the Venezuela thing he talked about, which kind of proves the Venezuela thing doesn't matter that much because he's having a really hardline stance on no countries getting any breaks if they have oil trades with Venezuela. And now he's saying, well, yeah, I might give some breaks to countries on tariffs. This is the exact quote that he said. I may give a lot of countries breaks, but it's reciprocal, but we might be even nicer than that. You know, we've been very nice to a lot of countries for a long time. We'll be announcing some additional tariffs over the next few days, having to do with automobiles, cars, and also to do a little with lumber down the road, lumber and chips, which goes against what the Wall Street Journal said yesterday because they said, hey, chips, pharmaceuticals, and cars, autos are off the table. They're not going to get tariffed. Now Trump is saying, actually, there might be some additional tariffs on chips and automobiles, but we're going to give some countries breaks based on how reciprocal we're going to be with these tariffs. All of this to say, there have been various conflicting headlines throughout the entire day on tariffs. Some have been bullish, some have been bearish. The market did not care. They did not care. S&P 500, 1.84%, reclaimed the 200-day moving average. Absolutely incredible. Palantir is up 7%. NVIDIA got to 122 at some point, but now it's at 121.78. Tesla, high of day, almost about it did touch 277. Let's see if we can close above 277 in 5 minutes. I mean, realistically, I think the market just said, we don't care anymore. We want to buy stocks. We want to go higher. Dead cat bounce maybe, but given all the green that we're seeing today, it also feels like there's some strength underneath this momentum. Very few pockets of the market are red. It feels kind of legit, but I don't think we can really say anything until April 2nd. But then again, all the headlines around April 2nd are so flip-floppy that who knows if April 2nd even matters anymore. I think at this point, you kind of just enjoy the green, maybe hedge some positions, maybe take some profits, maybe sell some covered calls. But we definitely do have a rally happening with us right now. Hopefully this can last for the next couple of days to really be solidified. But that 10-year is worrying me a little bit because that's not what the Fed wants to see. And then Trump's comments are worrying me, but they're also not worrying me because it seems like the market doesn't care about what he says anymore. And that's kind of how we're seeing this momentum manifest itself in a pretty damn good green day. I mean, 2% on the S&P 500, dude, that's not easy to get. That's not easy to get. Now, some people are also saying a seasonal switch. Yeah, we looked at a bunch of charts this morning. It does feel very on time. The end of May, we bottom, and then, or the end of March, we bottom, and then April, we go higher. But who knows if that's going to be the case this time. Here is Besant talking at the cabinet meeting, and then we'll look at a couple other clips. This was from today. By the way, StreamYard saying my audio is not working on screen share, so just let me know immediately if you guys can't hear this, but I think it should be working.
We are under your direction. We're reprivatizing the economy. We're bringing down government spending. We're bringing down excess employment in the government sector. On the other side, we're going to re-leverage the banking system. We're going to have all the new manufacturing jobs, so everyone who's laid off from the government will have an opportunity to go into the private sector, and that is going to lead to disinflation. Inflation is under control. We're going to get the affordability crisis fixed. So lower energy, deregulation, more private sector jobs that will naturally get interest rates down. Interest rates down. Mortgage rates are down almost every week since January 20th. The energy costs are down about 15%. Crude oil is down about 15%. And as we keep that going, interest rates are going to keep declining. It'll be good for mortgages. It'll be good for credit card debt. It'll be great for auto loans. We are
So again, Besant making the argument that he cares about yields coming down, rates coming down. I don't know how he necessarily gets that with the 10-year spiking the way that it is. But the same kind of story that's being articulated by Besant at the cabinet meeting around rates. Here's what Lutnick said as well.
What is so exciting is April 2nd is just around the corner, and that's American Liberation Day. That's the day when the rest of the world starts to treat America with respect. And your leadership, understanding how the rest of the world treats us and what balance and what fair trade finally is going to be, is going to take care of America. It's going to launch the External Revenue Service to start to build the power and prestige of America back. And I'm honored to be helping you on that course.
So, I mean, from the optics, the meeting today with the cabinet stuff was good. It's just, I personally feel Trump tried to say some things that could get the markets to react a bit more negatively in the context of tariff volatility, and it just didn't happen today. Markets called BS, and they said, nope, we are planning to go much higher, and we're not going to let anything necessarily take us down. Which I think is fair, because at some point, dude, like, wow, the S&P 0.9% away from a 2% day. At some point, markets have to allocate capital. And a lot of capital has been leaving the United States, believe it or not. There's a chart I'll show you guys after the bell. But and we looked at a similar chart last week, but foreign equities have been rotating massively, or foreign investors have been massively rotating out of the United States into Europe in particular. And so you definitely have sentiment that probably wants to get back into an NVIDIA, but they're just waiting for the right macro environment to make sure NVIDIA doesn't get screwed because Trump says something. And today is one of the first days of 2025 where the market is not reacting to what Trump says. I mean, 3 out of 4 of the things that Trump said today, outside of the last thing he said at about 3:15, were bearish. And typically a week ago, 2 weeks ago, it would have at least had some red candles. And I mean, we barely saw red candles today. PMI was also good in the morning, and we just continued this green momentum. Look at Tesla, dude, 278.50. It's trying to go for 12% on the day. Palantir, 20 cents away from 97. Amazon, 203. AMD, 113. NVIDIA, 121.5. Robinhood, 48.30. CrowdStrike's up 3% on the day. They unveiled some new AI stuff this morning in regards to cybersecurity. Rocket Lab's up 7%. Netflix is up 1%. HIMS is up 8%. I mean, full risk on appetite is what we're seeing today. Bitcoin as well, 88.2. Incredible day. Absolutely incredible. Wow. Big Bear AI was up 20%. I didn't even see that. Look at that. I mean, if that's not a risk on, I don't know what is. Big Bear AI up 20% on the day. And then you got Celsius as well, almost above 35. That's up another 6% on the day. It's a green day. A green day for the majority of stocks and sectors right here. We're going to end it out in about 45 seconds. Let's have all eyes on Tessie and see what she can do. 278.4. We got a bunch of other headlines that we'll talk about in just a bit, but the overarching tariff drama back and forth that we just talked about for the past 15 minutes, all of it leads to the conclusion, which is that, in my opinion, the market doesn't care anymore. And maybe April 2nd, they'll start caring more, but as of now, they just don't care about what Trump says when it comes to tariffs. SoFi also pumped today. Yeah, I mean, pretty much every sector had a decent string of momentum. Even stocks that were relatively green or flat, they were like at least up 0.07%. Like, it's hard to find names that are really getting hit today. And so it's a nice broad-based market rally led by the NASDAQ and some of these growth stocks. All right, here we go. Monday, first end of the trading day for the last trading week of March, 4 p.m. Tesla closes at 278.45. The stock market is now closed. All right, Tessie, 11.93% on the day. What a freaking day for Tesla. Up $30, equivocates to about $89 billion, or about, $91 billion in market cap. Just an incredible day for Tesla. NVIDIA up about 3%. Amazon ends the day up 3.5%. AMD ends the day up 7% for everyone who's been holding AMD for a while. Nice green day to deal with some of the pain on this one. It bottomed at around 95 2 weeks ago, now back to 113. S&P 500 ends the day up 1.78%, so not necessarily 2%, but I'll take it. The 200-day was 573.8. We closed just 20 cents above that. If we can sustain that, it feels more bullish than bearish. Robinhood, 48.36. That's up 9% on the day. They do have their gold event coming out in 2 days, so we'll see what they can unveil. Rocket Lab was up 6.71%. SMCI was down because of a downgrade, but it was only down about 1%, so nothing too crazy. Bitcoin right here, 88.2. MicroStrategy had a good day. They were up about 10%, 335 on MicroStrategy. Coinbase as well was up about 7%, 203, back above 200 on Coinbase. In terms of the Max 7, Apple was up 1%, Microsoft was up 0.5%, Meta was up 4%, Google up 2%, Amazon up 3.5, Nvidia up 3.1, and then Tesla led the way. Still moving after hours, now above 279. A nice 12% day on Tessie. You guys said Oklo has earnings today. I did not know Oklo had earnings today. We can definitely check out Oklo. They do indeed have earnings. So let's pull them up. Oklo, that was up 14%. Again, momentum based on AI, CapEx, nuclear is the sort of narrative there. I don't think we have numbers yet from Oklo, but I will keep those with me. And then we'll see as soon as they come out. Oklo's 5 p.m. Well, I think we get the numbers before 5 p.m. I don't think we wait till 5 p.m. I mean, we'll see. The market's expecting 0 in revenue, and the market's expecting them to lose 7 cents a share. So, you know, if they pull up with like 100,000 in revenue or something, that would be a beat. If they pull up with $1 in revenue, that that would be a beat. So let's see. GameStop doesn't have earnings today. GameStop has earnings on tomorrow. Tomorrow. I'm not going to be live for the close tomorrow, but they'll have earnings tomorrow. So yeah, no market close tomorrow. Everything else in the schedule this weekend is going to be the same, just not tomorrow. And Rumble is going to be before the open, but we have GameStop tomorrow after the bell. Okay, so I think that's how we closed out. Pretty much, let's look at a heat map for today, and then we'll get into a couple other headlines. But again, it was green. Okay, so here's the questions for everyone. 2 questions. Number 1, do you trust this bounce or not? Like, actually, like, do you trust it? Like, do you really trust it? Or, you know, like, do you trust it? And did you buy anything today? Did you buy or did you sell anything today? Did you hedge anything today? Curious, any moves that people have made. Intuitive Surgical has earnings today? Why doesn't, okay, my calendar doesn't show these companies having earnings. Otherwise, I would have known. Let me confirm that. But if they do, that's a big company. So let's take a look at it. Intuitive Surgical. These guys do robotic surgeries. By the way, there's the heat map. So there's all the green that we saw today. Yeah, OPEX is done. That's fair. We did have that quad witching day on Friday, and that led to relatively low volatility, to be honest. It wasn't as bad as people thought it would be. ISRG is the ticker on Intuitive. They were up 3% of the day, $180 billion company. I'll take a look to see if they have earnings today. Okay, so let's see in the chat. We got some people buying Lunar. I'm Beneficial bought some Hood. Tyler bought some Tesla and Palantir. Chris said he sold some Tesla. Okay, took some profits off the table. June says, I don't trust this, but I like how it makes me feel. That's very fair. That is very fair. Doug says you can never trust anything. That's why it's called a wall of worry. That is also facts. Tiger bought some Hood. Brandon nibbled on some Tesla and AMD. Harmsy just DCA'd as always. All right, so no crazy moves. Andy said he did some window shopping. Dude, technically we're all window shopping every day, right? Looking at these stocks. Like we're literally just looking at all these names sometimes window shopping. But yeah, it doesn't seem like any of you guys made any crazy moves, which is fair. I don't think today was the day to make any massive moves. I think even if you have to buy some of these stocks a little bit higher a week from now, but it proves that there is a real rally happening and it's not really just like fake, then I think the peace of mind of buying stocks still is not the worst thing in the world. Now, here's what Trump said. We listened to Lutnick and we listened to Bissett. This is what Trump said in the context of everything that's been going on with tariffs and with more investments. And then we will keep going from there. But here's what he said earlier today at the cabinet meeting.
Good cabinet meeting. We're on our way to some tremendous numbers. I think, first of all, many companies are now moving into the United States. They're coming back. Some of them left us from many years ago, decades ago, and they're all seems they're all coming back. We have probably identified maybe $4 trillion worth of companies moving back or going to move back. Many of them have announced it's going to be tremendous jobs, high-paying jobs too. And you probably know the chip business, not because of the CHIPS Act, which was a disaster. You gave billions of dollars to companies that already have many billions of dollars. They said, thank you very much. It was no incentive for them to use it. But what is good is the tariffs will make it so that they want to come back. That's why they're coming back. I think they're coming back because of the election that took place on November 5th and because of the fact that they have to come back because the tariffs are forcing them to come back. And remember, there are no tariffs if you build here, and that's a big factor. So we have record numbers. Howard was just telling me the numbers that we're talking about are crazy, beyond anybody's wildest expectation. So they'll be doing a lot of building, all sorts of businesses, including the basics of automobiles. We have, as you know, Honda is coming in with a massive plant to Indiana, but there are many plants that are happening, and literally some are started already. General Motors is already redoing plants that were half abandoned, or they have plants that weren't being fully utilized. They're going to be, they and others are going to be making parts and other things in those plants so that it's one-stop shopping finally. It's ridiculous. You had to go to Mexico. You had to go to Canada. A car went all over the place. It was like, I don't know how that would have worked, but that's the way it sort of ended up. We had a deal, and we have a deal, which is fine, but people took advantage of the deal. They cheated. And when you cheat, the deals are unfortunate. But now what's happening is the numbers are beyond our wildest expectations.
So Trump taking a lot of credit right there for bringing investments back into the United States, even with the April 2nd cloud kind of hanging over us. Also, this is one more point that I forgot to bring up. Trump said that a rare earths deal with Ukraine was official and that he's going to be signing it shortly. I don't know if they're going to have like a presentation or something for him signing it in the White House. Maybe Zelensky's going to be there when he signs it. But he did say a deal has been reached. That also could have been a pseudo catalyst for the market today, not only because the deal is good for the U.S., but also it means that there is a furthering of a pathway to eventually get a full-on ceasefire and an end to the war. But that was another catalyst today that potentially affected the markets getting some love. Comedy and Cabaret, thank you for the €30 super chat. Thank you, Amit, for everything. Amir, Arnie, Matt, and all of you are the 4 horsemen for making retail investors rich. People can't help but love your authenticity, and I will watch your content my whole life. Really appreciate you showing up, Amir, Arnie, Matt. It really takes a whole community, especially in the context of Palantir, to be able to analyze this company. And on our 205th Palantir Weekly, we had a nice, good debate about the valuation. But I think that's why people watch the podcast, to try to get multiple perspectives from a bunch of people that are trying to really take their perspectives and their personal experiences and then see if it can be helpful for a lot of other people. So appreciate you watching. Thank you for the super chat. And yeah, hopefully our collective insights will be valuable. On Hood Weekly today, Amir's actually going to be on that episode at 9:30. So Amir has now gotten into Robinhood. He started buying some stock. He really likes the numbers. He took advantage of the discount that we had when we fell to, I think, 32. And so he's going to be going through a bunch of different numbers tonight with us on Hood Weekly. And we'll try to get some of his due diligence in the context of what he likes about Robinhood. Tesla's still moving after hours, dude. 279.2, up another 1/3%. It is not stopping at all. Oklo numbers are not out, guys. I know it's running a little bit after hours, 1%, but I don't see the numbers anywhere. So I don't think their numbers are out. Yeah, it's not out. It is not out. Also, we have KBH today. There's another home builder. Lennar kind of fell last week about 6% on their earnings. So we'll see if KBH also has the same pain. They were up about 3% on the day. But yeah, Oklo numbers are not out from my understanding. Red Cat has earnings today. I did not know that. Red Cat, I'll show their numbers once we get them, but I don't have their numbers yet. Yeah, if they do have earnings, their numbers are not out. At least not yet. So we'll see if we get those numbers out. Cool. Okay. So those were some of the core headlines. One headline on Robinhood, given we're talking about it, and then we'll move on a little bit more to some of these tech stocks. Robinhood did have the state of course, Massachusetts. For those that are new to the channel, I can't say that word. I'm sorry. It is what it is. I've tried. It doesn't work. I can't say it. I don't know what's wrong with my lips, but I can't say it. Massachusetts, they came out and they subpoenaed Robinhood because they said their sports betting is illegal in the state of Massachusetts. So they are upset at Hoodie. To me, this is a nothing burger, dude. Like, some states are probably going to try to get Robinhood because Robinhood's kind of skirting the law, because technically sports gambling is banned there. But if you do an event contract, which is a futures contract, it basically is sports gambling without sports gambling. So Robinhood kind of figured out a way to get through the regulators. Well, the regulators are fighting back now, at least in Massachusetts. So we'll see if this is a trend amongst other states that don't allow gambling. I think the worst case is like, okay, some of those states just won't allow the residents to bet on Hood anymore, but it's like, New Jersey is not going to ban them. So for the degens in New Jersey that want to bet on college basketball on Hood, they'll have access to it. Maybe Robinhood's potential user base comes down a bit if a lot of states start doing this, but I think Robinhood's legal team is ready for this. I think they kind of knew this was going to happen anyway. And so I don't think this is a surprise to them, given they had a feeling that Elizabeth Warren would try to continue to stop capitalism from being capitalism. So it is what it is. I don't think it's that big of a deal. We'll talk more about it on Hood Weekly tonight, but overall, hopefully doesn't take away their massive TAM. Robinhood, we talked about this morning, event contracts, 95 million have been traded. 95 million have been traded over the past week and a half. I mean, it's just insanity, the product adoption and how much is rolling up. And as long as they can get through the regulators, hopefully we see more of that continue to take into effect. All right, let's listen to Dan Ives, get his thoughts on what's going on in the context of tariffs and where he thinks tech will trade as a result of the flip-flopping by Trump on April 2nd.
Can I just
Sure.
stop for a second? You also covered the auto names, Ford, GM, and so forth. The president just made some comments that are actually not moving the stocks, although he seemed to put auto tariffs back on the table. What's your read on that?
I think it's all this game of high stakes poker. I think Street's basically reading it as April 2nd feels like it's essentially off, and originally was on. But he's saying, but don't be surprised if they come back. And I think investors view it that there's some flexibility now, which again, that's positive for GM, Ford, with Stellantis and others, but no one knows what's around the corner.
So in other words, he said autos are not going to be part of the April 2nd tariffs. But so today when he says, well, I'm still planning something on autos, that just is an open-ended.
It's like you're punished. You could go out with your friends today, but you're going to be punished this weekend. The point from a kid perspective, it's like, it's showing like this still could come down, but it does feel like there's some flexibility.
So it makes sense to you for the investors to just kind of ignor it at this point?
They're basically
Right.
shrugging the shoulder. Look, it's a choose your own adventure book, right, in terms of where this all goes.
Well, speaking of which, percolating underneath all of this, we were just talking about how IBM's a top pick of yours. But are you just bullish on all of tech, Dan?
Look, I mean, it's my view. Overall, we're in year 3 of a 10-year build out for AI. So
I love Dan, dude. I love Dan.
So the reason
And
that
everybody benefits from that?
not everyone, but when you think about what's happening in terms of this $2 trillion that's going to be spent in terms of AI, it's chips, of course. But when you look at software, you look at cybersecurity. I mean, in my opinion, it's a 4th industrial revolution that we are in. So I get it in terms of some of the sentiment, but that's why we're so bullish.
Why does IBM jump out to you as a name that, this is going to be a game changer for them, right? I always think of it as kind of this legacy business where it's people get kind of trapped in the ecosystem. They're very sticky in that sense, but how does this help them?
And you could say they were late to the game. I mean, for years, I think Arvind really understands where cloud's going. I think this is a different IBM, not your grandfather's IBM. I mean, we're really seeing massive success when it comes to cloud penetration and AI. And I think
You know who else is bullish on IBM? Steve. Steve's been talking about IBM for a minute. So that's interesting. If Dan's getting on the IBM train, that might be one we can ask Steve about this week and see what he thinks. He still thinks that quantum computing, all that stuff, IBM is going to be a big player in. So interesting that Dan is rotating to some of those legacy tech names in terms of this momentum. Tesla right here, still up after hours. Robinhood a little bit down. Qs and NVIDIA down a little bit as well. The S&P 500, just a small decline after hours after a monster day. Actually, no, it's up 0.05%. KB Homes, no earnings yet, or maybe we did. Oh, no, we got some earnings, down 10%. Oh, boy. Oh, boy. There you go. There you go. KBH Homes is down right here. 10% on the day. So it looks like those numbers were not necessarily the best. That's kind of predictable given Lennar also took a hit. We know the housing market has been in a tough situation given mortgage rates. Let's see how bad some of these numbers were. And then Oklo, I don't think has reported yet either. Oklo down about 0.5%. Yeah, nothing too crazy. And ISRG, I don't think they have earnings today. I think we would have seen their results by now. So I don't think they have earnings today, but KB Homes, that one is down 9.9%. Okay, let's see if I can get these numbers from KBH. Oh, yeah, here we go. Revenue 1.39 billion, that's down 5% compared to 1.47 billion. Home deliveries decreased 9% to 2,770. Average selling home price rose 4% to 500,000. Wow. That's above the country average at 440. And home building operating income was 127 million compared to 157 million. You got declines across the board for KB Homes, and that's why this stock is getting hit right now. It is what it is until these rates come down. And you have to deal with kind of the supply-demand dynamic of people having money that want to buy homes, but not having enough suppliers. Mortgage rates coming down only increases that demand. But if you still don't have the supply, what does that mean? So the home builders in a little bit of a tough situation right now. And KVH seeing that pain right now. Is Oklo dumping? Are we dumping on Oklo? What do we got? What do we got on Oklo? Oklo is, okay, I wouldn't say dumping. It's down 1%. Let's see if we can get these numbers. Okay, so I think we got it. Yeah. All right, so $0 of revenue. It's actually holding up pretty nicely, given that they lost 28 cents a share. So they lost 400% more cents a share than what the street expected at 7 cents. So that's a miss, obviously. And 0 in revenue. I mean, I don't think that should be too surprising. Oklo right here down about 1.65%. It was up 13% on the day. So this is nothing, dude. This is absolutely nothing for it to take a 1.65% haircut after hours right here. Yeah, it's barely down 1%. Full year for Oklo, we are looking at a loss of 74 million for the year. They didn't make any money. However, they signed a bunch of deals. And so if you're into Oklo, you are essentially paying, what's the market cap of this? 4 billion for all of this, all of these different things that they signed. And you're probably also paying because you think Sam Altman is going to hook them up with some juicy OpenAI contracts, given Sam Altman is on the board of Oklo, or he's the chairman of the board of Oklo. And so that's essentially what you're paying for. Yeah, I would give it 2 years. I would give it 2 years for it to really play out right here. Okay, cool. That's what we got in the context of Oklo. Not bad. Not bad. Overall, a green freaking day. It's hard to argue with some of the green we saw today. Palantir right here at 96.85 after hours. Palantir trying to play with our heartstrings a little bit and get back to triple digits. And then Tessie, obviously just an aggressive day. Now a couple things on Tesla. Well, one thing, Tesla now 279 after hours. One thing, and I talked about this in the morning, but I think it's still relevant. If Q1 sucks for Tesla and it holds these levels or around these levels within 4 to 5% on the day of earnings, and we'll have April 2nd delivery numbers come out, so that'll be really important. And the downside is 20%. Let's say you think Tesla, no matter what, on Q1 is going to tank by 20%. That puts you right back at $215. So yeah, it would suck to go back to 215, but imagine that Tesla was 215 going into the print. That 20% would take you well below 200. And so if we can hold this momentum on Tesla around 270, 280, it just gives a little bit more of a baseline for the higher price action to lead to something that's low, but not as low as we saw in the past, below 200, maybe just above 200, unless Tesla falls 30 to 40% on earnings, which I just don't think you can be that bearish enough for it to fall 30 to 40%. That would have to be discounting a lot of momentum, unless the earnings are that bad. And look, the earnings are probably going to be bad, but I don't think they're, lose 50% of your market cap bad. It's going to suck, but it might not suck that badly. And also, if it sucks but doesn't really suck, I mean, do we really even get 20% down? You get 5, 6%? Does it kind of just stay stuck within their range? Do people really sell off of a EPS miss of like 45 cents? I mean, now that you've entered this momentum stage for Tesla, which I know it's only a day into it in terms of like a real momentum that we're seeing right now, we got to see if this can hold. But still, you're in a nice situation. if earnings aren't that bad, maybe this stock has the ability to hold this momentum. But if you're buying it right here, you're kind of betting that earnings are not going to be the worst thing in the world. What if Tesla gains 30 to 40% on earnings? Okay, so I would be a bit skeptical that that could happen. I think it's going to be a little tough to get there, but there's a shot. Speaking of a 30 to 40% gain, let's do a little bit of a segment on this because I responded to a post that one of my friends on X made. Her name is Jess, and she's a big Robinhood bull. And a lot of people had a lot of questions, so might as well talk about it right here. So what did Jess do? Jess has 11,000 shares, and she sold the $80 covered call for Hood by May 16th. So she is betting that Robinhood will not have a 60% move from 50 to 80 in the next 1.5 months. And in order to make that bet, she's putting up 11,000 shares for sale via covered calls with 110 contracts. 11,000 divided by 100 gets you 110. And she collected about $3,200 in premium in order to put up those 11,000 shares for sale. So essentially, if Robinhood does not get to 80 by 5/16, which look, I'm bullish on Hood, but I also think it would be very aggressive to have a 60% move in about 45 days, then she gets to keep her 11,000 shares and she gets to use them as essentially assets that she can rent out to people that are willing to buy those calls. And in this case, they paid 30 cents for those calls. She, as the call seller, collected 30 cents from all those people. You need 100 shares to be able to cover the call. That's why it's called a covered call. She has 11,000 shares, 11,000 by 100. That's how you get 110 contracts times 30 cents or $30 a contract, because 30 cents times 100 shares. And that got her this $3,000 in premium that she picked up. Now, what's the worst case scenario? Let's say Robinhood gets to $80. She can roll the contract well before that happens. And, that gets a little bit more deeper into what she can do, but she doesn't have to necessarily deal with the current expiration she has on this contract. However, let's say it does get to 80 and Robinhood just has this massive move to the upside. The worst case, and this is why I'm such a proponent of selling options, is that she sells 11,000 shares at $80. Okay. Like that's a lot of money. And I think her average is somewhere in the 20s. So I don't think she would be that upset. Again, I think she would, given Jess knows how to manage her options and she doesn't want to lose her shares, she would take action before Robinhood gets to that exact price level. But the point is, people were, commenting under this that it doesn't make sense. She's risking $500,000 for $3,000. And to me, and this is where Chris and I also have a fundamental disagreement on this, I don't think you're risking $500,000. I just fundamentally disagree with that. The worst case scenario is you make 300,000, 80 minus 50, $30 a share times 11,000 shares. And you lose the 500,000, but you lose it because you made an extra 300,000 on top of that. When I think of risk, I think you're losing the money. And so, yes, is it like technically defined as a risk? Sure. But when people say you're risking 500 to make 3,300, I'm like, no, you're risking 500 to collect that 3,300. And the worst situation is that 500 turns into 800 because you are selling a call so far out of the money that you're picking up all that capital appreciation on the sale of the covered calls if you have to end up selling it. Which, look, maybe you think Robinhood, you want to hold for the next 20 years. You think Robinhood is going to $1,000 a share. You don't want to sell it at 80. That could be the bad part of this. But is that the worst thing ever to make 800 grand? No. But if you're buying calls and the stock does not get to the value that you need to get it to, or better yet, you're buying puts, which we had a ton of people buy those Tesla 100 puts based on that Reddit post that went viral. If Tesla does not significantly get closer to $100, you lose everything. That is real risk, in my opinion, because now all that premium you paid for the buying the call or buying the put is gone. Whereas when you're selling the call, the worst case scenario is that you sell shares at a higher price than your average and you make a profit. And if you live another day to make a profit, I mean, I just don't see that as the worst thing in the world. So, yeah, I mean, the advantage to her is the asset owner, 100%, 1,000%. And again, people are freaking out. They think Hood's going to get to 80 by May 16th. I mean, I hope it does, but I'm a little skeptical that we get a 60% move by May 16th. I mean, even if the gold event is good, even if Q1 earnings are good, that's a really aggressive move. And I don't blame anyone for selling that call if we get there. But I have some doubts if we are able to get there. And if we do get closer to it, you could just roll the contract and try to save the shares in a different way without having that $80 strike continue to be under pressure. Now, could we get to 80? Yes. Not saying we can't get to 80. I just think it's aggressive to assume we're going to get to 80. And that's why I think that move is not the worst thing in the world. All right, let's get an update right here on the tariffs. We talked a little bit about it this morning. Here's a official news update on what Trump said when it came to giving breaks on these tariffs.
The White House, he made some new comments, our hourly comments on tariffs. Megan Casella joining us now with that breaking news. Megan.
Absolutely, Brian. This is still ongoing in the Roosevelt Room at the White House. But President Trump, just a couple of minutes ago, was asked about the reciprocal tariffs coming on April 2nd. He was asked essentially whether there was any room for negotiation for any countries to escape those tariffs coming next week. And the president replied, quote, "I may give a lot of countries breaks," signaling there that there is certainly negotiation. These are not going to be universal, every country getting hit at once. To me, that's sort of the latest sign that there could be some softening here coming from the White House and the administration as they continue to develop this plan for next week, saying there may be breaks coming for what he says could be many countries. He was also asked about that reporting over the weekend that we talked about at the top of the hour, about whether reciprocal and sectoral tariffs would be coming on that day, April 2nd. And he replied, "It's going to be everything, but not all tariffs are included that day." Again, signaling that this could be an ongoing process. And he says things like tariffs on autos, as well as pharmaceuticals and semiconductors as well, that those will be announced in the coming days or weeks, but not necessarily, it now appears, on April 2nd. One final point, our Eamon Javers is in the room, and he asked the president specifically whether that 25% tariff announced today on all countries buying oil from Venezuela, whether that would stack on top of tariffs that are already in place. And the president told him that, yes, it will stack on top of it. And that is a very significant escalation there, guys, with China in particular, a major buyer of Venezuelan oil. Trump has already imposed 20% tariffs on China so far this term. Now he's saying an extra 25% on top of that will take effect as soon as next Wednesday, April 2nd. So a lot coming out here, maybe some softening on tariffs on one hand, but also a very firm stance, at least towards China on the other. Guys.
Yeah, we'll see. I mean, I wouldn't say China's a major buyer. They're the biggest buyer of Venezuelan oil, but it's only about 1 million barrels a day. They do about 65%. So maybe a half a shipload per day, which a lot of that goes through traders, which you could mask. You could sell to a trader, and then the trader sells it to somebody who then sells it to somebody. But the point well taken that if that 25% is layered on the current 10% on top of the other 10%.
They're still caught up in this.
That's a lot of percent.
Yeah, but see, there's no way in hell that 25% tariffs are going to be spread on China across the board because they buy some oil from Venezuela. Like, that is just, it's absurd to even think that that was the idea they had this morning to put out. That if you do business with Venezuela, we're going to put 25% tariffs across the board. Like, at some point, it loses legitimacy, right? Like, and you don't want to be a president or a White House that when you say something, people don't take it seriously, because then you really start losing impact and influence in the context of how you guide public policy. So I don't think this is going to play out the way that Trump said it's going to play out. I genuinely think it was an attempt for him to try to introduce more volatility into the markets, because it was the most random thing ever about Venezuela. Like, I know we have issues with Venezuela immigration, but it's not like he's been talking about it that much for it to just pop out of nowhere right before the cabinet meeting. It was weird. It was weird for that to happen. But yeah, I think the market just broadly did not believe that that would end up playing out. Is Oklo dumping? Are we really dumping on Oklo? Oklo Pounter's up a little bit after hours. Oklo's down 7%. Yeah, there you go. I mean, dude, Oklo, Archer, Red Cat, the reason I don't own a lot of these names is because it's just really, they're speculative names in a time where I think, you know, you want to be a little bit risk off. And if you do want to be risk on, Tesla, Hood, Pounter is enough risk on to handle versus companies that, you know, just don't have any earnings yet. So I have a couple friends who got into Oklo in a private deal in 2021 or 2018? It was a while ago. And their average is like $4 or $5. So they're holding on simply because, you know, they got into a VC a while ago. So they don't really need to, when your average is that low. But for people buying it at 30, 40, I mean, like, you're just buying a company with no earnings. You just got to really hope that the narrative is enough to sustain itself at this point. Yeah, Red Cat is not today. Red Cat is going to be on April 4th. Red Cat is not today. I uploaded an interview with the Red Cat CEO over the weekend, so you guys can check that out, but their earnings are not today. Bookend Tackle says the risk on that covered call would be that if it went to 100, you would lose $20 per share, but you still made money. Yeah, exactly. So if Robinhood went to 100 and Jess had to sell her shares at 80, the risk is that she misses the upside. But again, and I don't know, maybe this is just like a philosophical difference I have when discussing covered calls with people. That's an opportunity cost risk, but that's not a risk to the point where, like, there's real money on the line. That's like saying, okay, I bought Palantir at 10, I sold it at 70. It ended up going to 125, so I missed out on that extra $55 a share. It's like, yeah, you missed out on that, but is that really a risk? Because you made 7x on your money. So when people say, oh, well, you miss out on the upside, it's like, yes, there is an opportunity cost there of selling that covered call. And, you only got 3,000 from the covered call. Robinhood ended up going to 100. You would have been better just holding off, and then boom, you would have collected all this upside. But if you still sold at 80 and your average is like 20 and you made 4x, I mean, I don't consider that conventional risk the way I consider buying options and the risks associated with those. Even though, yeah, it would suck if you lose out on the upside, but it doesn't it doesn't suck as much as not having any upside. And so that's why I think covered calls are still a great asset. The reason I think people are so scared of covered calls is because 2024 was massive, right? And every day, like, your covered calls will be under pressure, which is a fair reason to be afraid of them. But in a flat-ish market, or a market where you're selling super out, I mean, she's not selling a $50 coverage, she's selling an $80 covered call. So like if she sold a $50 covered call, I would say, yeah, that's not smart, because Robinhood probably has a decent shot of being above 50 in a month and a half. Maybe it's not, but it has a decent shot, so you don't take that risk. 80 is like, I don't think the shot is decent. I think there is a shot, but I think probabilities are likely on her side of it not being there. And so if you can rinse and repeat that, every single week, every single month, there is plenty of money to be made on the stocks that you have in the portfolio. Losing on upside is what my wife calls greed. That is, yeah, that's another argument you can make, that it is greed. Bsoft says, I think the only risk is when it booms up like HIMS, where contracts are too expensive to close and then it crashes and you never had the chance to sell shares at anything above 50. Yeah, and you're playing volatility there, right? So you have to be okay with the nature of dealing with all that volatility. But if you've already predefined what you're okay with happening, aka selling some shares at 80 or being able to roll the contract or manage it, then the volatility is like, it's ultimately good for you, because you're able to generate income off of it. And the worst case scenario is you might lose some shares in the meantime. I mean, this is where TJ actually has a really good point on covered calls, right? A lot of people get on TJ because his covered calls are super aggressive, but in a market correction like we experienced over the past couple of weeks, TJ's covered calls were some of the best covered calls in the market, right? Like, his covered calls definitively printed, and they were put on as a hedge against something like that correction happening. It's just we haven't experienced that like aggressive correction for basically a year. In 2024, we had some corrections here and there, but they bounced back so quickly that those covered calls didn't even have time to print after you had the correction. So I'm not a fan of aggressive covered calls. I'm a fan of, really going far out of the money and trying to collect some income, or just being unemotional about the shares, so you don't care if they're aggressive covered calls, because the share is getting called away. It doesn't have an impact on you. But I'm not against just not selling covered calls, because I don't think it's a horrible opportunity if you've defined your risk. Tesla up 0.33% after hours, 279.20. Palantir up 0.4%, 97.16. MicroStrategy down a little bit. Coinbase down a little bit. Bitcoin just up 2%. S&P 500 still green after hours currently right now. Look, it's not bad. We got some green continuing to play out right here after hours. Martin says, covered calls are great if you want to sell at a certain price. Why not do covered calls? Yeah, and then the reason why some people don't do it is because, like, they say they want to sell at a certain price, but then when it gets to that certain price, and I've been a victim of this as well, then you don't really want to sell. So I think a lot of it is more emotion. Like, if you're unemotional about NVIDIA and you buy some shares at 120 and you're ready to sell it at 125 in a month, and you sell the covered call at 125, you collect $3 of premium, so technically you're getting 128 as your exit, and you just don't care if NVIDIA gets to 150 because all you wanted was a move from 120 to 130, then you take your money and you leave. Now, a lot of times that doesn't happen. People get too emotional about it. I've been a victim of that as well. But if you can get the emotions out of it, I don't think it's the worst thing in the world. Bitcoin right here, 88.3. Currently right now, after hours. Amit, are you going to the Hood event? Yes, I'm going to the Hood event. It'll be super fun. I'll be there with Roy and Tanner. So we'll definitely get you guys some content. I think it's going to be a good event, dude. I think they're going to announce some really cool shit. I have no idea what they're going to talk about. We'll try to pontificate about it tonight on Hood Weekly. But I think there's going to be some new products, and I think those products are going to further solidify Robinhood becoming one of the largest financial institutions over the long term. Couple updates on Rocket Lab. So Cantor Fitzgerald reiterated their overweight rating on Rocket Lab, $24. They are confident in the Neutron launch timeline. And they believe they can get through 9 launches of Neutron by 2027. Therefore, they think there's about a 30% upside from the current prices at around $19. Additionally, someone who is not working at Cantor Fitzgerald, but is also well known in the finance space, Martin Shkreli, said that this is the bag 7, the 7 stocks that make up the bag holder economy. IONQ, Rigetti, D-Wave, Oklo, AMC, Big Bear AI, and Rocket Lab. Now, look, I like Shkreli. I think he's a very smart guy. But I don't know why he had to put Rocket Lab on that list, bro. I don't felt that was a little disrespectful, okay? I don't think Rocket Lab deserves to be on the bag 7. The rest of them, I don't really care about. But Rocket Lab, dude, like this one did not deserve to be. Like he could have picked any other name over Rocket Lab on the bag 7. So yeah, Matt Money, bro, you got to fight this guy. You got to send him back to jail, bro, somehow. Like he can't be saying this shit. Rocket Lab on the bag 7, dude. Come on, bro. Come on. All the others, you can make a legitimate argument for why they could leave you as a bag holder. Rocket Lab could leave you. Any stock could leave you as a bag holder. I just feel like Rocket Lab is the most legit out of those 7 names, bro. Like, are you kidding me? We're going to put Rocket Lab in the same list as AMC? Come on now. Come on now. That's not... I think that's too aggressive. I think that's too aggressive right now. I would pay anything for Matt Money to fight Shkreli at one of those YouTube fight things. Oh my God. Do you guys remember when YouTube boxing was a thing? Like even Graham Stephan, who's a finance YouTuber, engaged in YouTube boxing. This was like 2-3 years ago when there were all these celebrity boxing, but not celebrity, like YouTube celebrity. It's not like real celebrities, but like YouTubers were hosting these boxing matches. I think Logan Paul kind of started the trend and then it kind of took off into different verticals. There were like makeup bloggers on YouTube doing boxing fights. I was like, what is going on? Like, why is everyone trying to do this? But I would also pay for Matt Money to get in the ring with Shkreli. That would be fun to see. Okay, so Technical Tuesday is not happening tomorrow, unfortunately, because I will be on a flight at 3:30. So maybe we can do Technical Friday if Jason can do Friday, but we're not going to be able to do... He might not be available Friday. He's not available Mondays either, so we got to see. We got to see. Or maybe he does it himself. Maybe he does it on his channel. I'll text him. I'll see what he wants to do. Maybe you guys can just watch it on his channel as well. But yeah, not going to be able to do it tomorrow. TJ will be on hopefully Friday. TJ was on vacation last week. He should be on Friday. We'll get to see his new Tasty Trade account and everything he's doing with options. So hopefully this Friday he should be on live. If not, definitely next Friday. But last week he was on vacation, so he was not able to be there. Yeah, I don't think Jason knows I have a flight. Jason doesn't know I have a flight. So that's why we'll not be doing Technical Tuesday tomorrow. Oh yeah, one of the Botez sisters did it, right? The Botez, these guys, these girls are chess influencers, and they did the boxing as well, dude. It's crazy. It's absolutely crazy. But so many people got into this whole boxing thing. Dude, I can't stream from the plane. So United has this Starlink partnership with SpaceX, but there's no Starlink on any of the flights yet. Like, I don't know if it's still rolling out, but on my flights, it's still really crappy internet. The best you can do is scroll Twitter. I mean, you can't really do much other than that. But I still pay for it every time because could you imagine me for 6 hours without being able to scroll something, dude? I can't. I can't do it. Like, I can't watch the airplane movies either, bro. The airplane movies are not enough to keep me distracted. But like, I'm waiting for actual Starlink, bro. I want like real internet on the airplane. And we don't have it yet. I'm flying into SFO. I have been to SFO so many times this year. And I've been to SFO so many times over the course of my life. Like, I feel like SFO is number 2 outside of EWR in terms of airports I've been to. You know, I've never been to San Jose. Never been to that airport. I got to do that one day, but SFO is the main airport I've been to as well. Amid yapping about stocks and economy. Dude, that would be a bar, right? Hey, everybody, welcome to the Market Open. It's time to talk about the economy as I'm sitting in economy. And if I had the soundboard, I would just blast that shit. That'd be great. People would probably be a little upset that I'm yapping, but it's got to happen one day. It's got to happen one day. So hopefully we do it. I don't know if I have let me check. Do I have a window flight on this one? I don't even think I selected a seat. Hopefully we have a window or an aisle. Not trying to be in the middle for 6 hours. Worse than a baby crying. Dude, on the last flight, there was a baby crying for like 20 minutes. It was not fun, bro. It was like, I'm so sympathetic to it because obviously it's a baby, right? Like the babies are going to cry. But it's just like, oh my gosh, bro. It is so annoying when it happens. Oh, did you guys hear this story today? 23andMe filed for bankruptcy. It's the weirdest shit ever. Apparently the CEO is stepping down, and there's some controversy around if the genetic tests were ever real genetic tests. Look at this. California's Attorney General is warning users of 23andMe to delete their data as soon as possible, with the company facing bankruptcy. The fate of its massive hoard of health and ancestry data remains uncertain at this point, but given its value, it's likely to be sold. So either a private equity firm or another holding company is going to be buying 23andMe because they declared bankruptcy today, which means if you've submitted your data to 23andMe, your genetic data, which, like, obviously for privacy reasons, that's pretty important. It's going to get bought up by some other company. And so California's Attorney General today is saying, hey, delete it as soon as possible. And then I read another article today, which I'm not sure about, but another article today said that the reason they're going bankrupt is because there were some problems with how they've done these ancestry tests. And a lot of it had to do with IQ more than ancestry in some weird way. Like there was just random shit that people were saying about it today. And so that thing's an absolute mess right now. And yeah, I mean, like, even if you try to delete it, right? The data is going to be there forever. It's has anyone ever sent their data to 23andMe? No judgment if you have, but I've just never thought of doing it. Maybe because, I never care. I mean, I'm Indian. I know I'm Indian. I have the privilege of knowing my ancestry. Some people don't. So I understand why they want to know. But like, to me, I never wanted to go deeper other than like, okay, my mom and dad are born in India. I was born in America. I'm an American Indian. It is what it is. But apparently, I didn't even know they were a public stock, bro. I didn't know the company was that big. They have that much demand of people sending in their data. Elaine says, I have found several relatives on it. Erwin says, yes to Ancestry's DNA. My friend got it for me as a gift. Yeah, I guess I've just never cared that much about it, but I could understand people doing it. Michelle says, I wanted to do the other one, but I haven't. Native Texan, but still sounds fun to know more. Dude, you Texas people hold your Texas identity with high pride. Very high pride. You guys love good old Texas. They were on the front page for Amazon for years. I used to see their commercials when I watched TV like 10 years ago, but I never thought of actually getting into it. Okay, cool. So what other headlines do we have? Let's see. I think we had a couple other things happen today. Nothing too crazy. Well, let's listen to JPMorgan. Let's see what they have to say. The real reason I'm clicking on this is because there's a girl in the thumbnail. So, to be honest, bro, it's like, I'm just, let's see if she has something good to say too. Here we go. Never heard of her. I've never heard of Stephanie Alega. So this is my first introduction to her.
Of the tape, how much stocks can keep rebounding if those daily tariff twists and turns keep coming. Let's begin with headlines. Twists and turns don't seem like they're going to end anytime soon. For now, the market seems poised to keep bouncing.
Yeah, I think there's 2 points to make. The first of which is nobody really knows what's going to happen and when it's going to happen. And so we look at April 2nd as the target date for when a lot of these tariffs are going to be announced. But the truth is we don't know what tariffs are going to be announced, on which goods they're going to be announced, when they're going to be announced. And these are important points that the market's looking for. And the other secondary but tangential point is you look at the response of the market today to the headline that some of these tariffs might be delayed in the Wall Street Journal this morning, and then that he might have carve-outs in the headline this afternoon. The market rallied after both of these headlines, and it really drives home the point of how levered the equity market is right now, but risk assets in general, to these tariff headlines, both the positive and the negative.
Yeah. So what do I do, Stephanie? I mean, you're going to continue to get these headlines. We know that. We've had a nice bounce off a 10% correction.
Tesla 280 after hours. Tesla 280. We'll get to Stephanie in a second, but 280. Goodness gracious. What a freaking run, dude. It's pumping after hours. It's 280.3 up another almost 1%, another $2 after hours. Holy crap, dude. This is either this is retail buying in and they're going to get smacked, or this is institutions that completely missed the momentum, I guess you could call it rebound rally, or this is algos trying to pump it up in order to get done. Like, this is something happening, but this is an aggressive move. There's no headline. Like, there's been no headline on Tesla today to justify like 12%. So it really does feel like macro momentum. And either retail is going to be right or retail is going to be wrong.
Jen, how do you feel?
Yeah, I think we're in this period where markets are still digesting the fact that this tariff overhang isn't going anywhere anytime soon. And the three most dangerous words for an economy are wait and see. And so long as uncertainty persists, there continues to be considerable downside risk to markets and earnings expectations. So I think for investors, it's a really important time to just make sure your portfolio is set up for a wider distribution of outcomes. Recession is not the base case, but the probability of one has increased.
Okay, Shan, so on that note, I mean, are we essentially in a binary market? If you believe that you're going to have a recession, then stocks are too expensive, even with the correction that we've had. If you think it's just a growth scare, then you think the bounce just continues. How do you see it in terms of that equation?
Well, it depends on what you mean by a growth scare and how long that lasts for, Scott. So for, we already know that the first quarter for GDP for the US is going to be pretty challenging. We know that because of inventory builds and weather and dampened consumer spending. But if you look out in the second half of the year, it's really what you think that wider range of outcomes is. And so if you're looking at 1.7 or 1.8% GDP for this year, that probably still supports some of this cyclical rebound. We've had a re-rating in the tech stocks, and obviously we've seen that unwind in momentum. We're seeing some signs of life over the past couple of days. I think what investors are struggling with is that there's going to be a period of time over the next couple of months where you're waiting for some of that pro-business sentiment, that deregulatory impulse, and frankly, for the direction of the attention of the White House to shift to Congress and taxes. You're waiting for that to happen so that businesses can become more confident and start to really commit themselves to the CapEx and the hiring that was really earmarked for the second half of the year and into 2026.
And so I agree with all of that completely. I mean, like, she's spot on with this idea that GDP is probably still going to be anywhere from 1.5 to 1.8%. Hopefully, if we're lucky, we get back above 2%, which I don't think is crazy to assume. It really does depend on those tariffs. But if we get close to 2% GDP, her argument is like, when is M&A coming back? When is IPOs coming back? Like, when are all these things that everyone was promised when Trump got elected that would be super business friendly? When is that coming back? More importantly, when is the Trump administration's when is the Trump administration's priorities going to be about stocks over bond deals? Because it will be very obvious when we see they care about stocks based on the actions they're going to take to uplift the stock market. And in 2017 is the exact replica of how it played out. Like, Trump started implementing lots of things, in particular regulations getting cut off, in order to get the markets to start feeling that the administration was very pro-business. That hasn't happened yet. I mean, he's brought in a lot of money. I think the number today was estimated about $4 trillion in different commitments from the UAE, South Korea, etc. And that's super bullish. That's great. But the effects of those investments are not going to be felt in the short term for the stock market. What affects the stock market short term is M&A. So them not shutting down Google and Wiz, that would be bullish. IPO, things like CoreWeave going public, which I won't be buying that IPO, but I'll be curious to see how that plays out. And then deregulation. Those three things have to play out. But again, I know I sound like a broken record. Trump doesn't care about any of that. He cares about bond yields. He cares about interest rates. He said it himself many times. That's what he cares about. And with interest rates rising today and mortgage rates rising today and the 10-year rising today, I just struggle to see exactly what's the game plan here when we have to deal with this 10-year that's not necessarily going in the right direction. So I think that's going to be the caveat to everything that's going on right now. If Tesla has a V-shaped rebound to 300, the whole market will have a V-shaped bounce. I agree with that. If Tesla finds itself getting to 300, I don't think the market's going to be lagging Tesla. I think Tesla will be leading the market get that V-shaped bounce to meaningfully happen. And seasonally, it wouldn't surprise me. We looked at many charts over and over again that seasonally, this is the time for us to start getting that V shape in. Yeah, Tom Lee said that as well. Yeah, so it feels very possible that that's going to play out. Someone said, is my dad buying a Tesla? Okay, so we talked about it in the morning, and maybe after the show, depending on what time he gets home, we get to go visit a Tesla dealership. I am really trying to get him. I am trying to buy him the Model Y. I'm trying to get him to agree that it's time to buy it. And I think he's ready to buy it, dude. These prices, I'm looking at the website right now. Our inventory is down by about $8,000 almost per car. I mean, it's pretty incredible, dude. It's pretty freaking incredible. So we're getting a lot of these cars that are showing inventory decline. Maybe there's a shot I convince him, but we're gonna have to see. It's selling out in a lot of places. That's good. And look, if we don't get to it soon, like I don't know if we're gonna be able to get those Model Ys that cheap, because this is New Jersey. Everyone in New Jersey, not everyone, but like people buy Teslas in New Jersey. Tesla's still moving after hours. So if we don't take action soon, we might not have a chance to get these prices. So we got to see. Yeah, there's plenty of charging stations, dude. New Jersey has a charging station like every couple miles. So charging stations are not the issue here. It's more so just a question of getting it. My dad is more indecisive than not. He debates a lot to make decisions. So I did not get that gene from him. My mom is very decisive. I got the gene from my mom of being super decisive, but my dad is really good with money and just how he thinks about financial literacy. My mom is like the opposite. She doesn't really care that much about financial literacy. So I got the sort of money like focus from my dad, but I got the decision making from my mom. And so like if it was me, I would have bought the Tesla by now. But my dad's different. It takes some time to come to a conclusion on what to do. And he'll admit it himself, dude. He knows. It's just like at this point he's 63. He knows. Like it takes him a good couple weeks to make a decision. That's why I was so impressed when he bought. That's what I'm saying. When he bought the Nvidia dip at like 115, I was so impressed because he doesn't make decisions that easily. He didn't even call me to ask, bro. He just came home. He's like, "Oh, yeah, I bought 50 shares of Nvidia." I was like, "What? You bought 50 shares of Nvidia? What are you talking about?" He's like, "Yeah, it was cheap." I was like, "All right, things are changing here." He is getting ready to buy these dips. So, but yeah, I don't know. Hopefully we can get this Model Y. I just think, dude, my dad's getting old. He still drives a lot, and I'm like, I feel like FSD would be safer for him. I really do. I feel like FSD would be safer than him actually driving every day, as long as he gets used to it and knows, when to intervene and all that stuff. Like, I think it could be much safer for him over the next couple of years, but. We got to see. It wouldn't be Juniper. It would be the old Model Y, like the one I have. Not Juniper. He's not going to let me pay 50, 60 grand for a Juniper. Also, he doesn't need a Juniper. He doesn't care about like that. He just wants a Tesla, but he doesn't need all the features of what Juniper comes with. Everyone told me I would be regretting getting the old Model Y. Dude, Juniper is like not that impressive to me. Like it's cool, sure, but it's not like, oh my God, I feel so bad I didn't wait. It's like I could not care less about Juniper. So you buying it or is your dad? I'm trying to buy it for him. He's like started to agree that he's going to let me buy it for him. But it still comes down to him like making the decision. So it would be like $500 a month if I buy it for him. If I put like 10,000 down. So like it's not a crazy monthly payment to add to my bills. But he needs to let me actually buy it. Sounds like you wish you waited. Dude, I still haven't even looked at like the Juniper videos and like the reviews of it. Like I'm not a car guy. I don't care. I really just don't care. So it's like, I don't know. I just never cared. But there are some people that think it's like the best car in the world. What is Juniper? It's the name. Yo, what is Juniper? Is that like, what does Juniper even mean, dude? Like, what is like, what does the word even represent? Juniper is an evergreen shrub or small tree. Okay, let's ask Grok. Why did Tesla name the new Model Y Juniper? Does anyone know this? Granted, I'm the guy who didn't know that the Model S, the Model 3, the Model X, and the Model Y spelled sexy. I found that out a year ago. I didn't know that at all. So Juniper is a code name. Juniper. Wait, is it actually named Juniper? Grok is saying it was just a code name. Hold on. Tesla Model Y. They actually named it Juniper, right? On the website? Or is it just called New Model Y? Wait, I don't see any Juniper on the website. Also, Juniper is BS. It's just like some name that people came up with to talk about the new model. Yeah, it's just called New Model Y. It's not even called Juniper. It's an internal code name. Okay, but why did they even name it internally Juniper? Like, what was the reason for that? I don't see why. Just, dude, I thought the actual name was Juniper, dude. I actually thought it was Juniper. Okay, it's not. It's a New Model Y. So there you go. It doesn't even matter in terms of the name. Yeah, okay, it's just New Model Y. I didn't know that. See, this is how much I don't care about cars, dude. I just know that Tesla is the best car I've ever been in. It's just now. Granted, I've only been in a Civic and a Tesla, but dude, it feels like a video game when you drive this thing. Like it's just, I can't imagine driving another car. I really can't. And when I drove the Cybertruck in California with Jason, that was an amazing experience. Now, granted, I don't know if I would want to drive that every day because that's a big car, bro. And just like parking and all that stuff. But like, it was fun. And so, I don't know, maybe my next car years from now is a Cybertruck, but it's just so much fun driving it. Tesla right here, 280.75 after hours. Also, we did have an update from, what's his name? From, what's the guy's name? Piper Sandler, Alex Potter reaffirmed a 450 target on Tesla overweight rating, and they dismissed factors like delivery declines because they pointed to supply issues as the main reason for deliveries being bad, not like demand issues. And they said the brand damage doesn't matter. They essentially said, hey, everyone's freaking out about brand damage. It's not that big of a deal. So look, if that becomes the narrative, and what does Tesla trade on? It trades on narrative. If by Q1 earnings, the narrative becomes no one gives a shit about brand damage, everyone cares about FSD and robotics and to ramp up their ecosystem around energy, etc., it could be a totally different trading environment for Tesla, and we might not have to see $200. Here's Ryan Detrick on the markets. Let's get his thoughts on what's going on right now.
1.7, 1.8%. The Nasdaq up more than 2% here. Can this rally be believed?
Well, we think so. Thanks for having me on a green day. It's kind of rare here. You know, one of the things, Morgan, that we like about this, what have we seen the last couple months? A lot of selling on Fridays and a lot of selling on Mondays. This is 2 Mondays in a row now. Buyers stepped in. Friday's up 4 weeks in a row. The market's kind of telling us some things, you know, hate to say this time is different, right? The four most dangerous words, but we're seeing strength around those days that were weak. And historically, you tend to see strength around weekends in bull markets. So we like that. Now, the big question, you know, last comment here, can it keep going? We think it can. I mean, the first half of March is usually quite weak. The end of February is weak. I know a lot of seasonal stuff is out there, but just the over-the-top negative sentiment. I know lots of guests have pointed these things out, but I'll tell you, the anecdotal sentiment, just people I have never heard from in years were reaching out to me a week or two ago saying, should I sell? Should I sell? When you have all the sellers exhaust themselves, like I think we just did on March 13th, which is usually when you bottom in March, we think this rally has some legs to it.
Interesting. I mean, just looking at the Dow right now, we just turned fractionally positive on the quarter and on the year now. Brooke, want to get your thoughts here. Are you as optimistic, dare I say, or constructive, especially given the fact that growth year names are really adding to this market rally right now? I mean, Tesla finishing up 10% today.
Yeah, we are optimistic. We have a year-end price target on the S&P 500 of 6,500, which would be about a 13% gain from where we are today. And we think that's going to be earnings.
Bro, you know it's green. We're at the bottom of CNBC's banners. They have a green that's usually black or blue, and it's just bright green today. So today was one of those great days for them to have green banners at the bottom of the clips.
Driven more so than multiple expansion. The trick is figuring out what earnings are going to be right now. We're at the mercy of guidance from companies, and it's a difficult environment for them to forecast. When the most recent CEO sentiment survey came out, there was optimism, more optimism than we've seen in quarters. However, they indicated that their biggest concern right now is geopolitical uncertainty. And, you know, a lot of that's stemming from tariffs. So the sooner that we have more clarity, the better off we'll be and most likely dodge a recession.
So Ryan, yeah, along those lines, how much of the down market that we saw recently was about the tariffs themselves? How much you think was about fears of slower growth and the uncertainty that still hangs over not only exactly which tariffs, when, how much, et cetera, but how responses will play out?
Yeah, John, I mean, a big part of it, I think, was the uncertainty over tariffs. Like we just said, the uncertainty policy indexes are about the second highest or highest they've ever been across the board. And you know what happens? Stocks tend to do a lot better when those uncertainties that high. Why? Because then you get a little certainty like what we just got. Okay, maybe the tariffs are a little more targeted. It's still kind of some bigger question marks and answers, but the market clearly liked that. But again, I'm a message of the markets type of investor. 2 Fridays ago, we had 90% of the stocks higher in the S&P 500. Last Monday, St. Patrick's Day, 90% of the stocks higher 2 days in a row. We call that a buying thrust. 3 and 6 months later, you're talking like stocks have never been lower, right? So it's some really strong returns. So to us, hate to say the bottom is in, but we think there's a good chance we bottom right at a 10% correction, middle of March, over the top negative sentiment. And now we're seeing the market tip its hand that the buyers are back in control.
Look, for now, the buyers are back in control. He's right. For now. And again, I think everyone's hesitating to call a bottom, but it does kind of feel like it's bottomish. But the reason I'm saying that with a little bit more like, I guess, logic is because Trump tried multiple times today, seemingly, to disrupt markets, and it didn't work. And that typically feels like, all right, nothing's slowing this down because the markets just don't care anymore, unless you get a Q1 earnings recession. And we see guidance significantly go lower. The Bank of America CEO last night, he was like, oh, the reason that Delta reduced their guidance is because consumers are spending money on other things because of travel. I think that's a cop-out answer. I don't think that's good enough to, like he's trying to get people to say, oh, well, that consumer confidence slowing down manifested through airline guidance. That's because consumers are doing other things for leisure and entertainment. Maybe, but that feels a little bit more legit than not. Like, I don't think people are buying Netflix instead of going out on vacation. So that is more real than not. But then you look at Carnival Cruise's earnings. They didn't take down guidance. In fact, they reaffirmed 2025 will be the best year in the history of Carnival Cruise. And so you do have these conflicting narratives that I think we're trying to make sense of. But I think after Q1 earnings, we'll have a much better understanding of where the consumer is going into the second half of the year. Is Tesla still pumping after hours? We are still pumping 281.5. My goodness, up another 1% after hours. Here's a picture that someone just tweeted. I don't know if it's real or not, but they said this is an actual conversation they had on Hinge. And I think more people are going to have to deal with it. So the girl says, want to discuss our special interests? The guy says, yes, you start. The girl says, Athenian, democracy, and Greek polls. The guy says, Tesla stock. The girl says, I'm not sure we're compatible. Dude, even if this is fake, I feel like this is definitely happening in this country right now, where a guy, kind of cares about Tesla and Elon, is actually inspired by him. He brings it up to the girl. And then the girl's like, oh, that Nazi? Like, oh, really? You want to talk about him? I feel like it's going to happen more and more and more. So even if it's fake, which it could be, it doesn't matter today. 281, baby, on Tessie. Doesn't matter if she doesn't want to respond. 281 on Tessie. Oh, did you guys take my advice? Did you guys text your friends about the 200-day moving average? I texted my mom that. She was just like, what does this mean? And I was like, it means stocks are green. But a bunch of you guys, some of you guys sent me some pictures of what your friend said, and it was hilarious, bro. It was absolutely freaking hilarious. But this is what my mom said. She was just like, what does that mean? I was like, it means stocks are green. Someone texted me that he said this to his friends, and they were like, dude, what the fuck are you talking about? And they're like, can you put this in football terms? And then he went into Grok, and he was like, explain a football scenario with the 200-day moving average. And then he sent him like this amazing explanation. And then the friend was like, dude, how'd you think of that? And then he realized that he was using AI and he got upset. But it was so hilarious. And some of you guys had different ways of texting your friends about this. I think there's a couple of screenshots below this post. But we hit the 200-day. It was an important thing. This guy said, okay, good. That means putting money makes sense. Okay, this one's definitely fake, but this guy said, son, I think it's time for you to get a job. I want you to move out of the house ASAP. This is definitely fake, but that's hilarious. But yeah, I feel like it was time to tell your family or your friends that we got the 200 day, dude. We got the freaking 200 day. I was at work, but no, I wasn't going to say this to anyone. Dude, if I worked in an office, I would go around the office. I would go around the water cooler and I would be like, hey, you know, the S&P 500 reclaimed the 200 day. I would literally say it to everybody, bro. I would literally say it to everybody I know at work. If I was at college, I would go up to my friends. Wow, 282 on Tesla. Up another 1.3% after hours. My goodness. I think FOMO is getting pretty high now as well. I mean, this type of a move after hours, you got people thinking, all right, this sucker's running to 300 tomorrow. They don't want to miss it, and they're getting back in. And that might be something that we're seeing right now. Also, this happened today. It like technically happened last week, but like it went out today publicly. Let me pull this up. The FBI came out and they basically said, you better not fuck with Tesla. This is the benefit to Elon being deep in the White House. He you know, you can get Trump to get the FBI to basically say, hey, individuals who target Tesla vehicles and dealerships nationwide with arson, gunfire, and vandalism will be treated essentially as domestic terrorists. So I heard there's one guy that is up for 24 years because he got caught. Let me see if I can find that story. Tesla vandalism, 20 years. So they are really trying to make an example out of these people. Okay, no, so they didn't get 20 years, but Trump is saying the maximum sentence should be 20 years in jail. So, I mean, I think it's going to make people at least think twice before doing this. And look, I'm a fan of it. I mean, like, dude, you cannot have people burning down private property. Can't have that. In America, we actually respect people's private property. Like, that's the basis of what this country is built off. So you can't do that. Like, that's just, especially over politics, like peaceful protest. That's totally acceptable. Civil disobedience, that's also what this country is built off of. Not burning down people's property. Like, and if you got to threaten people with a massive jail sentence, like just to scare them, like that's the whole point of jail, right? To act as a deterrent. And so ramping up those threats, I think it's, if you got to do that to stop these people, sometimes you got to do it. But that is another headline that we saw today. Tesla right here, 281.76. Currently right now, after hours. Okay, cool. Is that pretty much it today? I think those are all the headlines. My sister left me on red when you told her. I should have texted my sister that too. My sister probably would have left me on red too. She wouldn't have cared. Amit may not have any friends in the office with his take on steaks. I'm tired of justifying it, dude. Like, I'm really getting tired of trying to prove to you guys that medium well is the right way to eat a steak. Like, at this point, you guys can believe whatever you want about medium rare. It's not the right way. And I'm like, I don't need to keep making the argument over and over again. Like, at this point, I had a few people reach out to me that they agree with me. And the reason is because they agree with the truth. Like, I'm not even trying to do it to be funny. I really think medium rare is not better than medium well. I just don't. So it is what it is. Amit, what's your opinion on the GameStop YouTubers pumping up earnings for tomorrow? Well, what else will they do, right? I mean, if you're a GameStop, are there still GameStop YouTubers? Are there still people who make daily content on GameStop? I mean, what else do you do other than pump up the fact that earnings is coming up, right? Like, you kind of have to. Wow, there are. Holy crap. There's a couple of channels that every day they're talking about GameStop. I mean, yeah, my opinion is GameStop is like GameStop, you know? So I wouldn't buy the stock. I wouldn't really engage with it. I do think, you know, there might be some strategic ways to sell calls to some of these GameStop gamblers, but it requires taking on risk that you could probably get the same premium in other places. So like a Tesla and Nvidia, which you're probably more happy to hold those stocks if you have to bag hold them. But yeah, GameStop's been a mess, dude. It's been a mess. They have $4 billion. The thing is, they have $4 billion in cash though, so they can do something. They can turn things around. But like Ryan Cohen has not really shown leadership in any meaningful way, in my opinion, to get excited about GameStop. So I hate that it is still a top 10 stock on Robinhood's investor index. Thankfully, Palantir made it into that top 10 list. The other names I have no problem with, even though Disney and Ford, I still don't get how Disney and Ford are up there. But freaking GameStop being part of this list is so annoying to me. It's like all the gamblers who hate Robinhood for what they did with GameStop, they kept their GameStop on Robinhood. They didn't even leave because there's no way that, this would have been fueled by new investors coming into it. There's just not enough of them. So I feel like this is from 2021, people still holding on to this damn stock, and they're doing it on Hood. And I'm like, bro, just leave. Like, didn't Vlad fuck you over? Like, go somewhere else. Like, take it off of Hood. So I hope this changes soon. I really do. Like, every time they release the investor index, every month they release it, I get so upset seeing GameStop on it because, like, I want Hood to be a more evolved platform from GameStop. And just like the legacy of that. And I still don't get Ford and Disney on this thing. The rest of them make sense. The rest of them is just tech. So this list is, I'll put the link in the chat. This is just Robinhood's aggregate assets under custody divided by the top 10 assets. And it's updated like the second or third of every month. Vlad owns all the GameStop. Imagine Vlad owns a shit ton of GameStop on Robinhood and he's just selling the calls to all these gamblers. Dude, that'd be hilarious, bro. That'd be hilarious. I don't think Vlad's allowed to own any stock like outside of what is regulated by his brokerages, but he does have the app on his phone. We saw him literally checking the app at Investor Day on his phone. So he definitely uses the app probably every day to like keep up with the stock prices. But I doubt he has any personal net worth on the app. Ford was for sure because of the free stocks back in the day. Yeah, and so everyone got a free share of Ford, but like, dude, like they must have given out millions of free shares of Ford for that to still be a top 10 holding 5 years later. That's wild for it to still be there. Michelle says, telling everybody it's my grandpa's 84th birthday today. Congrats to your grandpa, 84 years. That's absolutely incredible. Hope you're going out. I hope he eats steaks, and I hope if you take him out for eating a nice steak dinner, you choose correctly. I hope you choose correctly to celebrate the 84th birthday. Also, someone else had a comment right here. Let me see if I can find it as well. It was a shout out I wanted to give. Let me see if I can pull up this comment. Yeah, GameStop on the it's at least AMC is not on the list. That's a good thing. I guess the AMC YouTubers completely died out, and all that's left is GameStop. At least from a content perspective. Where is this comment? Let's see if I can find it. Okay, I might have missed the comment. We'll see if I can give them a shout out tomorrow if I find it. Okay, cool. That's what we got. So Vlad can own individual stocks, but Nancy can. Vlad can, but it's highly regulated. Like when we asked him about like, does he trade stocks? He says like he theoretically can, but he would have to disclose every time. So it would be so like, it'd be just so annoying. And then also it brings up conflict of interest. Like, does he know anything about a certain stock because he's trading? So he says he decides to just not engage in it. But like, yeah, theoretically he can, but he chooses not to. Whereas Nancy's like, fuck it. I can do it. Sure. I'm going to do it. And she continues to do what she has to do. Now, Nancy's still bag holding Google, Nvidia, and Amazon. She's not green on those yet. Tesla still 281 after hours. Palantir as well, a little bit of a move after hours. So until this market really bounces, Nancy is bag holding with a lot of us. Are there any plans for Hood to expand to Europe? So yes, with the crypto stuff, with brokerage, I think it's Singapore over Europe. I don't think it's going to be brokerage in Europe. Dude, a lot of people are asking for it, but the problem is just the regulations, right? They have to deal with the regulatory environment, and I mean, they can barely expand to Canada. So trying to get through the EU, I think, is going to be not the easiest thing to do. But I hope they get Singapore done by the end of the year. I think they have a shot to do that. And if they do, then yeah, we will start to have some real international expansion. Evan says the interview I messaged you about looks like it's going to happen Friday, 4/4 at 11. Evan, can I tell them who? Can I tell them who, or do you want to keep it a surprise? So we're doing a Twitter Spaces with Evan. You guys know Evan, Stock Market News. I'll put his Twitter right here if you guys don't know him. This guy is basically like my Bloomberg terminal. His tweets are why I don't pay for Bloomberg terminal, because he basically tweets everything. You don't care? Okay, cool. So if this is going to happen tentatively on April 4th, 11 a.m., we'll do it live on the Market Open as well. We will have, well, actually let people guess. What do you guys think? Who do you think we're going to have? Who do you think we're talking to? It's going to be someone cool to talk to. You guys have been waiting to talk to this person for a while. But we'll be talking to them live. It's not Carp. It's not Jensen, dude. You guys, like, these guys are a little busy, bro. It's not the Grinder CEO. Where did you get Mitt Romney from? Why did four of you say Mitt Romney? Like, is he in the news? How did you randomly think of Mitt Romney? It's not Bernie Sanders. It's not Brett from Figure. It's not Trump. You know, that would be cool. That would be cool. Twitter Spaces with Trump. It's not Obama. It's not. Why are you guys saying Mitt Romney? It's not like. Where did you get Mitt Romney? That's the most random one you could say. Only one person. No, two people got it right so far. Only two people. You said it sounded like I was about to say Mitt Romney. Yes, because Mitt Romney is the most relevant person to talk to about the stock market on Evan's stock market account. That is, there's no way. There's no way you guys thought that. Okay, so it's not the Adobe CEO, but speaking of Adobe, an Adobe insider CFO bought 1,300 shares for 580 grand on Friday. So you got some Adobe insiders buying the dip. Okay, it is Tom Lee. It's Tom Lee. So looks like Evan's hooking us up with Tom Lee, and that'll be fun. That'll be super, super fun to talk to him. So that'll be cool. Mr. Tom Lee will get his thoughts on the market, Palantir, his Granny ETF, all those stocks in that ETF. And so we will talk to It's not Tim Waltz, dude. I love to talk to Tim Waltz, bro. Generational short-term bottom caller. Generational. Freaking-rational. Now I want to talk to Mitt Romney, since you guys are mentioning Mitt Romney so much. But no, it'll be Tom Lee, so it'll be cool. It'll be fun. It'll be dope. It'll be on Spaces. It'll be on Evan's account. It'll be just streamed live through YouTube. So, Evan, is it just me or you, or do we should have? It's me, you, Gavin. If we have a couple other people, let me know. So it might be a bunch of us, or it might just be 2 or 3 of us doing this. Do you watch New Girl? Is that a show? New Girl? No. This is an old show, right? New Girl? This is from like 2011. Yeah, this is old. No, I'm more of a Severance guy. I think Severance is a very unique philosophical angle on the nature of the duality between your work life and your personal life. And I think that after watching the season over the weekend, I've really inquired a decent level of sophistication around the concept around how that dichotomy affects the foundational element for what it means to think about your life separated in 2 aspects. So I'm more of a Severance guy. I'm not really a New Girl guy. But that's just me. That's just me. Oh, just me, you, and Gav. Okay, cool. So it's just me, Ev, and Gav. Gav's his partner, Wolf Financial. All right, cool. So it'll be us 3 and Tom. That'll be a fun one, dude. That'll be fun. We'll get to really pick Tom's brain. This is cool. That'll be fun. Dude, I watched Severance. What are you guys going to say? I watched it. You guys wanted me to watch a show? I watched the freaking show. I can tell you a ton about Severance. I watched it. You guys said watch it. I watched it. And so now I got to finish season 2, and then I'll be up to date with Severance. I don't know why you guys are hating, bro. I watched the freaking show. Like, I literally spent my time. I got the freaking Apple free trial for 7 days. I'm going to finish this thing before the free trial is done. And I watched the show. I enjoyed it. It was a great show. Absolutely great show. I really did enjoy it. All these comments in the chat about you only watched part of it. For anyone who's new here, please ignore them. They're just hating on my ability to quickly watch episodes. You know how people do speed reading? I did some speed watching. That's all. Did some speed watching. That's all it is. It's called being productive. Okay. Had a lot of stuff to do. You speed watch, you get the main gist of it. And then you like really pay attention to the last 5 minutes of the series. And then that's it. Boom. We're done. We got all the content we needed. We got all the content that we needed. Yeah, just like you guys watch me on 2X, or well, very few of you because I talk fast, but some of you guys do watch YouTube videos on 2X. There you go. I watch TV shows on like 8X, which means you skip episodes sometime, but still, you get through the gist of the series. How much did you watch without scrolling on X? Yeah, there was definitely some X involved while I was watching. The thing is, look, when two characters are talking, I don't think I need to stare at the characters. Like, even my sister, she was getting mad last night. She was like, why aren't you watching? I'm like, I'm listening, okay? I'm doing something and I'm listening. I'm getting the gist of the conversation. If they say anything important, I'll look up, but I don't need to literally just stare at them freaking talking. Like, it's not that serious. Which is ironic because on a podcast, I'm literally staring at two people talking and it has my attention, so it's so weird. But when it comes to a show, I don't think you need to literally stare at the show. Like, it's not that serious. Dude, I didn't even tell Steve I watched it. He was so mad about the steak over the weekend. I got to tell him I watched Severance. I think he'll be happy. Has Steve watched it? I think he's watched it. No, he's definitely watched it. He probably watched it a year ago, though. It came out in 2022. So. Yo, Michelle's hating, bro. Michelle, why are you being such a hate? Like, relax, bro. I watched it. Just because you watched every single second of every freaking episode doesn't mean you watched it in a better way. Like, you're discriminating against how I watch shows. And quite frankly, I find it disgusting, dude. Like, I really find it like abhorrent, to be honest. 281.53 on Tesla. We can all watch things in different ways, you know? That's it. We can all watch things in different ways. All right, I think that's it. Tell me what happened in episode 4. In episode 4, the dude did the thing, and then the thing led to the innie and the outie being confused about their identity, and then he went to the boss, and the boss like yelled at him and threw something at him. Was that episode 4? She threw like a stapler at him or some shit. I was like, what the fuck? The boss just threw a stapler at him? That happened though. I don't know what episode it happened, but it happened. And then boom, episode 4 ended, and we went to episode 5. That's it. That's what happened. In episode 4, I actually did take a nap. We came back from Texas Roadhouse, and I remember episode 3 ending, and I was just like, dude, I just had steak, bro. I was ready to knock out, and then I like fall asleep. This was like 2 hours before I had to do the future show last night. And then I wake up, and like I literally see my sisters like getting ready to press play on episode 5, and I was like, well, I missed that one. So, but see, now that I know the end, I don't care about episode 4. Like, what happened in episode 4 that was so exciting now that I know the end of it? You know? It is what it is. Now, a show I will never skip is Breaking Bad. That show, you don't skip episodes on that one. Same thing with Dawson's Creek, and same thing with The West Wing. But everything else, you can skip. Can't stare at two people talking in movies, but habitually staring at candlesticks all day long. Well, the thing about candlesticks is they go up and down, right? So it's like you're seeing something happen. It's constantly engaging your attention. Oklo, by the way, down 4%. Where's KB Homes? Is that one still down? Yeah, it's down 6% now. It was down 10%. But with two people talking, especially for character development, it is boring, bro. That's all. It's just boring sometimes. Oh, Prison Break, dude. We don't talk enough about this. For those that were watching the channel last year, that was the main show I watched in 2023. I just forgot about it. But Such a great show, dude. I think I should start that show again. Maybe it's too early though, because I just finished it last year, so maybe I take another year before I watch it again. But phenomenal show, one of the best shows ever. Literally one of the best shows ever. We don't talk about it enough. But for those that haven't watched it, it's from 2005. I think you should watch that show. It's a great, great show. What are you excited to ask Tom Lee? You know, I would love to get your guys' questions that I could feed over to Tom. My first question would be like, what does it feel like to have the pressure that he has on him? Because when he talks, people listen, bro. Like people really listen. And I would love to know how he mentally deals with the pressure of like saying something, making a stock call, dealing with it being wrong, being right. Obviously, his small cap thesis has not really worked out, but a lot of other things he got right. So I would just be curious. That would be my first question. I'm like how does it feel to be a rock star? Because if there's any rock stars on Wall Street, like it's got to be Tom Lee. Like everyone, whether you like him or hate him, you listen when Tom Lee speaks. Even if you know he's going to say something's bullshit, like the way he articulates, the way he brings data, the way he like has a calm demeanor, whether we're raging green or we're bloody red. He's someone I think people think of as consistent, which is why they can trust him. I think the biggest thing in the stock market that you can do to hurt your brand as a media personality is to be inconsistent. That doesn't mean don't change your mind when you get new data. But I think we've seen it when people flip-flop so much. It's hard to gain trust with an audience because the audience doesn't know why they're listening to you because there's nothing consistent in your analysis, right? And again, that doesn't mean you don't change your mind based on different pieces of data, but like if I'm bullish Palantir, I'm not going to get super bearish Palantir because I think the stock is overextended. Whereas you have some people that are just like, yep, Palantir's a sell, bearish, blah, blah, blah. It's like you completely have a 180 just because the stock is a bit extended, and that can hurt your perception. Also, I think I think it's also in the context of like macro, right? Like the reason people trust Dan Ives is because you can have whatever issues you have with Dan Ives. He's been consistent on Nvidia, Palantir, Tesla for a long time. And so people trust him. People believe in him when he brings up a new ticker because they know that he's going to stay with the story. And if he leaves the story, it'll be because something really bad happened. But if you stay with the story, then you know that story more likely than not, if you're right about the story, you gain some credibility. Yeah, Meet Kevin, you know, it's obvious there. You know, I don't hate Meet Kevin. I think he's an incredibly hard worker, but I think the constant flip-flopping has hurt his brand as well. You know, it's just it's one of those things where if you get super bearish, then super bullish, then super bearish, then super bullish, people just don't want to watch you because they don't know what to believe in what you're saying. I think my perspective on this market this whole year has been relatively the same. I'm pretty damn bullish. I think there's a lot of volatility to deal with in the midst of the bullishness, and that's where we use a lot of data to try to understand what's happening right now, try to put the pieces of the puzzle together. But I don't think this is sell your stocks and just stay on the sidelines and hope to God that we don't have a recession, right? Because I just don't see the market evolving that way. Now, maybe I'm wrong, but I think I'd rather be wrong and be consistent with my opinion unless I genuinely feel like changing it versus flip-flopping every other day. And then when it goes up, you get bullish. When it goes down, you get bearish. And then it's very hard for people to trust you. So I think that's the thing about Tom Lee. He's trustworthy. He's really trustworthy. And that's why people enjoy watching him. They had beef on Twitter. Yeah, I mean, a freaking, because what's his name? Meet Kevin called him out back in July when the market was topping out in 2024. And then Tom Lee came back a month later. He quote tweeted Meet Kevin. And he basically was like, who the fuck is this guy? That's basically what Tom Lee said. He was like, well, who is this guy? Why is he yapping? Why is he yapping up a storm? Now, granted, Tom Lee's been wrong about small caps, right? No doubt about it. I will get things wrong in my career. Everyone will get things wrong. And so Tom Lee's been wrong about small caps. But he was absolutely right about 2024 being a massive bull market. And unfortunately, Meet Kevin, I think by July, completely flipped. And he thought it would be a massive bear market. And that just didn't play out. So, yeah, and look, and I don't really feel bad for Meet Kevin right here because when you're going to say things like this, like you're going to say he's a retard for this type of stuff. I mean, like, come on, bro. Like when you're going to be derogatory against someone who has a lot of respect on Wall Street, I don't know. I don't think it's the way to play it. So, consistency. That is the most important thing. And I think I've also been consistent on Palantir. Like I feel Palantir's valuation is very aggressive. And I've been consistent from that since it was $45. And I've been consistently wrong because buying at 45 and ignoring the concerns about extended valuation would have been the smart thing, given I don't think we're getting back to 45. But it's not like I changed my opinion when we got to 90 and I'm like, oh, Palantir's undervalued now at 90. It's like, no, if you thought it was really extended at 45, unless the growth has that dramatically changed, which look, the growth has dramatically changed, but still the multiple that it's trading at is aggressive. I'm not going to get super bold up to buy it at 90 if I wasn't buying it at 45. Now now I'm more likely to take a nibble at 60, 65, maybe 70 if we see it again. But I think even in the midst of being wrong, I've been consistent about being wrong. And I was wrong at 45. Theoretically, the market has said Palantir was cheap. It's doubled since then. So more than doubled at one point. But that consistency, I think, is everything. Because it's your brand, right? Your brand is everything. That's another thing, dude. I had a phone call with this guy. All right, so I ended off on this. I had a phone call with this sophomore from Chicago. He's in university right now, and he randomly hit me up, and he just wanted to pick my mind on like content creation and tips to get into the finance world. And he's thinking of either going through investment banking or going down the independent content route. And I got on a phone call with him for like 20 minutes, just because I like to talk to people sometimes that are trying to get into this industry. And my number one piece of advice for him was don't fucking sell out. Like, your brand and your reputation is everything. It matters more than every single dollar you will get offered ever. And he was like, well, how are you making money on this? I'm like, YouTube ads? like that's how I monetize this. If you want to call that monetize, like it's not a sponsorship. It's not a partnership. It's not this. It's not that. It's not this banner at the end of the show sponsored by Grindr. Like, no, it's like, even though a lot of you guys probably would like that, but it is literally just, it's like there's a long-term vision about your brand. And he's a sophomore. And like, with sophomores, he's like, 19-year-olds don't understand this. I didn't understand this at 19. I didn't understand that if you're trying to build something long-term, you've got to be so fundamentally opposed to the devil. The devil is monetization. It's the devil. The money is the devil in this industry, because and it's not just a finance content creation. It's any type of brand building. When you try to monetize early, you get screwed. Until you have built a brand that is legitimate enough where you feel genuinely comfortable asking people for money or asking them to try out a product or service, it's all bullshit, because you haven't really built any brand equity. The reason why Tom Lee has almost $1 billion under his Granny ETF is because he's given out years and years and years of free content that has made people a lot of money. And, now he's monetizing with the Granny ETF, and I hope it goes very well. But the point is, he did that after he built a brand, not in the middle of building the brand, because he hadn't proven anything yet. But after you get one of the biggest bull markets correct, when everyone is bearish over the past 3 years, yeah, you built a hell of a brand, and now you have some trust with people. But doing it too early, bro, it fucks everything. It really fucks everything. And I tried to get him to understand, because he kept asking. It was so funny on the phone call. He's like, yeah, but the money, yeah, but I'm like, dude, get a regular job and build your brand on social media or whatever from 5 to 9. But like, don't get into this thinking like you're going to charge $5 a month and build a business out of that, because it's bullshit. It's so funny. Actually, over the weekend, there were some posts I saw of people that charge $5 a month for like, I don't know, like FinTwit people, right? Like people who like pay $5 a month to get my exclusive content on Twitter, right? And they took off the trading, the $5 a month subscription, because they were getting so much negative feedback, because the market has been tanking, right? Quote unquote tanking, but like, we've had a correction, and the negative comments from their subscribers that pay $5 a month to them influence them to get so upset about the fact that like people that are paying them money are now mad at how they've conducted market analysis or whatever. And they took away the entire subscription, because the pain of people paying money to you and then them losing money in the market, potentially based off of some chart you posted or whatever, where you said, hey, I like Coinbase at 200, and then Coinbase goes to 170, and those people are pissed off. That is like a real level of animosity that people that might be paying you have for what you're doing. Now, how do you deal with this? In my opinion, the number one thing is to be like, hey, I can get things wrong. I'm not a psychic. Like, hey, maybe I like Coinbase at 200, it goes to 180. I'm sorry you're paying $5 a month. You're happy to unsubscribe, but like, yeah, like I'm not a genie. Like, I'll get things wrong, and it is what it is, right? And if you're going to hate me so much over that, then just please unsubscribe, and the people that care about subscribing can continue to subscribe. However, the reason I think that person took away the paid subscription, this is the actual psychoanalytical reason, is because they don't feel they are worth paying $5 to. But they monetized early. That's the problem. Because if you think you're worth $5 a month and like some asshole's complaining about your service, okay, dude, get out of here. Like there's plenty of other people who are going to pay me. I don't care. Like, okay, here's your money back. Bye. But like, if you don't think you're worth it because you monetize too quickly, because you don't actually think your analysis was good enough to charge for $5 a month, but you had people willing to pay because of whatever reason, then you feel like shit. Then you feel like shit. And so I kept trying to tell him on the phone, I'm like, dude, don't go down the money route. Find another way to make money. Don't do it and compromise your brand. Because your brand can be worth a lot of money one day if you just give it time to build. I mean, and this, you know, I've said this over and over again, but this is literally what Palantir did. For 20 years, they made not zero money, but they basically made no money. They built all their shit for free, gave it out to as many government agencies as they could. Now they are printing. Now Karp's a deca-billionaire because he waited. He played the long game. Like instead of trying to be a billionaire at 30, he's a 10 billionaire at 55. It took 25 years. Sometimes people don't like how long it takes, but it takes time. And now he's filthy rich and he's built a company that like is going to leave him a legacy that is one of the best tech CEO legacies out there. And if Palantir actually gets to $1 trillion, I mean, like it's just so much more worth it. So much more worth it. You got to build credibility first. You just got to. Do it only once when you can get retirement money, correct? If you do it once and you do it right, like you don't really need to constantly think of different ways to get money out of people. Because like, it's not a crime to monetize. By the way, Tesla up 1.5%. Like that, like if you're building a business, like you need to monetize at some point. It's a question of how long you can wait without doing it, so you build up enough credibility so that when you do it, people actually want to support you. And sometimes that just takes time to be able to do it. Okay, cool. So we're done. Are we good for today? I got to go watch Severance season 2 because I finished season 1 and I really am excited for season 2. So I will let you guys know how season 2 goes. But I think that's it. Tesla right here. It is not stopping. 282.29 up 1.4%. I feel like we got some FOMO going on after hours, but maybe that FOMO is going to work out tomorrow if Tesla can continue this momentum. All right. Cool stuff. Oh, we got Robinhood Weekly tonight. I forgot. All right. So we got Weekly tonight. Amir will be on. We'll go through a bunch of different, a bunch of freaking charts and stuff like that. I'll have the daily recap. That'll be out in probably 2 to 3 hours. And it'll dive deeper into all the Trump tariff stuff that we talked about today. And then tomorrow, there's going to be no daily recap, no market close, just the market open. And then Wednesday, Wednesday there will be a market close because it's 3 hours early. So we'll be able to start at 12:45. We'll be done by like 2. And then the event is at 6 o'clock at night. So there will be a market close on Wednesday, even though we're going to be in California. Hood Weekly is at 9:30. 9:30. So there you go. Some of you guys, season 2 was a mistake. All right, I'll see, dude. I will give you guys my honest opinion about season 2. I don't know if I'll finish watching it tonight, but we'll see. How do you make money then just off YouTube? Yeah, and I feel like monetizing ads on YouTube is the least intrusive way, even though I know the ads are annoying sometimes. But like, you know, if you're doing 6-7 hours of content a day, I feel like a couple ads on YouTube automated, that's not the worst thing in the world. It's more so a question of associating yourself with a brand, because then you're tied. That's when it gets deeper. So like if you take money from freaking, I don't know, what's a common finance company? Like Seeking Alpha, right? That's when you're associated with Seeking Alpha. So now your brand equity is tied to their brand equity. And this is what we saw with FTX, right? Too many YouTubers were looking at 50 grand a month. They tied up their brands with FTX and then they got screwed. So I think that's more what I'm talking about, is like, how do you navigate dealing with your brand being associated with other brands? And the easiest way to deal with it is just not associate your brand with other people. That's it. Amit, were you paid by Palantir for working on AIPCon? I was not. I was quote unquote paid by Palantir in terms of helping build my brand by having the opportunity, the privilege to be at AIPCon. Like I saw that as an opportunity for me, not, hey, I'm doing work for Palantir. Am I technically doing work for them? Yeah, because I'm hosting the halftime show. So it's work. But it's building my brand. I feel grateful that they wanted me to host the halftime show and interview all these CEOs. Like to me, that's like, thank you. Like I'm so grateful for even having that opportunity. So that to me is more so building the brand. That I could care less, and I would never accept any money from them. A, because of the conflict of interest. B, because that's not what I'm here to do. Like everyone always asks, like, oh, would you get a job at Palantir? The answer is no. Would you get a job at Robinhood? No. Like I would never want to work for those companies because then I can never have an opinion on them ever. Like as soon as you work for a company that's public, you can't talk about them. You got to, I mean, like legal is going to get on your ass. You say one thing. That's like not exactly the way, like I can't tweet funny memes of Vlad if I'm working for Robinhood or of Carp if I'm working under Palantir, you know? So now granted, if I worked at Robinhood or Palantir, like if I quit YouTube and I said, hey, let me manage your social media, let me become like director of investor marketing or whatever, some stupid title. I feel like, yeah, I could get a job like that. And that would probably be a nice 6-figure salary, tons of stock-based comp, all that stuff. But like, is it worth giving up your own independence in a brand you're building? No, like, it's night and dude, I've never even thought of like, oh, maybe one day I should try to hit up Palantir or Robinhood, work for them. It's like, no, why would I want to, like, I have freedom to speak, like dedicating my life just under those two companies, which is really, I applaud anyone who works at those companies and chooses to go on that journey, but you're stuck with one company, right? So I think the independence of the brand is the most important. Yeah, working under that amount of regulation would suck as well. Mid asked for some share-based comp because of that 30 seconds. Oh my gosh. You just got to protect yourself from wanting the money too quick, bro. I feel like people want the money way too freaking quick. And the money could change your life in the short term, but the brand long term, just like there's plenty more money associated with that, even if it takes 10 years. But the journey of trying to get there is what matters, in my opinion. All right, cool. That's it. I'm out. Hood Weekly later tonight, and then the daily recap later today as well. Thank you, everybody. Appreciate it. I will see you guys tonight on Robinhood Weekly and tomorrow on the Market Open. Bye, everyone. Have a good one.